Time for another inflation number. Oh, goody. It's that time of the month when the government releases the Consumer Price Index, or the CPI. You know, that statistic where they lie to us about what we already know, that we're getting poorer while they congratulate themselves on doing such a good job fighting inflation. And lately, with the sad situation going on in Eastern Europe, we all know that life is getting way more expensive, way too fast right now. So let's take a look at some of these numbers and see if we can't guess where the CPI might be coming in tomorrow. Now, first off, last month the CPI read for January came in at 7.5% year over year, or 0.6% month over month. Now, that was driven mainly by energy and used car prices, and also food came in pretty high too. So let's take a look at those categories and see what they've done in the month of February. Now, first up is energy, and unless you've been hiding under a rock lately, you've seen that energy prices are rising big time. But one thing I want to point out is that most of these big spikes in energy have all been in the last week or so. We're talking about the CPI number for February right now. So when I look at this oil chart, I've put these red arrows at the beginning and the end of the month, and you can see that this big spike in energy prices has only just happened in the last few days, and most of it was not captured in the month of February. So we're actually looking at a pretty small increase in oil prices for the month of February. And in the year-over-year numbers, again, this big spike is mostly not captured in the month of February. We're actually looking at February of last year versus February of this year, so we're only seeing a similar sized move to last month's numbers. Same thing is true for gasoline. If we look at the month-over-month numbers, now we did see a pretty decent increase in the price of gasoline through the month of February, but nothing like the size of the move we've seen in the last week or so. The same thing, this big move since the start of the Russian invasion is mostly not going to be captured in this month's inflation number. Same thing year over year in gasoline. We have seen a move up, but the big move up won't show until the March numbers that come out next month. Now, in natural gas, we've actually seen a slight decline month over month, with the prices at the end of February coming in lower than the prices at the end of January. But in the year over year numbers, we're actually still seeing a sizable increase in the price of natural gas. So overall, I'm not expecting a big change in the energy input to CPI this month. Most of this big move in energy prices won't be reflected in this CPI reading. Next month, however, oh boy, we're looking at a big energy number for the March CPI numbers. Now, the single biggest factor that's been driving up CPI numbers lately has been used car prices. Used cars have just gone absolutely ballistic due to the chip shortage that's caused a shortage of new cars, which is obviously driving up demand for used cars. Now, the single best statistic for tracking used car prices is called the Mannheim Used Vehicle Value Index. And when we look at the Mannheim Index, you can see that massive jump in 2021 in used car prices. But take a look at that most recent data point for February of 2022. The Mannheim Used Vehicle Value Index actually came down just a little bit. Now, we're still looking at a massive increase year over year for the Mannheim Index, but month over month, it's actually going to come in negative. And it's important to remember in year over year numbers that the base effect is very powerful. As last year's January numbers roll off and last year's February number takes over in the year over year calculation, we could be looking at a significantly lower year over year increase in used car prices. So this could have a big downward effect on the CPI reading compared to what we saw in January. Now, another factor that's really been driving up CPI lately has been food prices, and it's the one I'm most worried about because I see food prices rising globally at an astronomically high rate, and all the bad things that come along with more expensive food, social unrest, rioting, wars. Well, let's take a look at food prices. And I found the best indicator for the average of food prices is the UN Food and Agricultural Organization's Food Price Index, or the FAO index. And right now, the FAO index is at an all-time high, just breaking above 140. So food prices continue to climb and show no signs of slowing. And again, this is going to be the February numbers. So we did see food prices increase in February, but this huge spike in things like wheat and corn lately is not going to show up in the February CPI numbers. So while this one may come in higher than it did in January, the big jump comes next month. And I see no sign that this trend is going to slow anytime soon. That's why my investment strategy remains focused in three main categories: precious metals, food, and energy. Now, the last category, and we mention this every month because we have to, is rent, or more specifically, owner's equivalent rent. And this is the main way that the government lies to us about our cost of living going up. Owner's equivalent rent, or OER, they basically pick up the phone and they say, hello, homeowner, how much would you rent your house for? And the homeowner, without having any real time to think about it or view comparable market analysis or anything else, just gives them a number and they say, okay, we got it, good, great, thanks, wonderful, bye. And that's how they get their input. They don't look at average rental increases. They don't go online and see what an apartment is actually renting for, No, they use this method, and it is probably the single biggest statistical lie that the government tells month after month. Now, according to last month's CPI read, the cost of shelter has only gone up 4.4% year over year. And if that number doesn't pass the sniff test to you, don't worry, you're not wrong. Because this is looking at Redfin's number, the average rent across the United States. You can see that according to their numbers, the average rent across the United States, shown here in red, is up 15% year over year, a far cry from the 4.4% the government gives us. And another thing I'll point out is that when you get big moves in mortgage prices, you tend to see subsequent moves in rental prices. They're a little bit delayed, and right now the cost of a mortgage is going up substantially, and that's going to drive more people into the rental market, and that's going to drive rents even higher from here. Although don't hold your breath, I don't expect the government to start telling the truth about the rent anytime soon. So we can probably look for something similar like a 4.5% year over year number or a 0.4 or 0.5% month over month number, even though the actual pace of rental increases in the United States is really about 3 to 5 times that amount. So when you view all these things in aggregate, food and energy have seen similar rises that we've seen in previous months, even though the big jumps this last few weeks will not show up until the March reading in April. Combine that with the monthly decline in used car prices and the base effect lowering that year over year number, we're probably looking at a very similar, possibly even a lower CPI read for the month of February. Now, the big variable there is the owner's equivalent rent. I have to throw that asterisk in there. The government could at any minute decide they're going to lie a little less about the rental increases, and they could raise up that OER number, and owner's equivalent rent makes up almost a quarter of the index, so that would drive a substantially higher increase in CPI. Would the government suddenly start telling the truth? I suppose stranger things have happened. You'll forgive me if I don't hold my breath. But again, I want to emphasize, don't worry so much about the CPI read that comes out tomorrow, because the big number, the big jump we're going to see next month, this big spike in energy prices and this big spike in food prices that happened in the last week or so, won't show up until the March CPI reading that comes out in April. And again, folks, I just want to emphasize, with the price of food in the futures market going so much higher so fast, do not sit around and wait for food shortages. And if you want to know more about setting aside some non-perishable food without breaking the bank, you can check out this video I did about how to feed a family of 4 for a month for under $100. Thanks for watching. Till next time, live small and dream big.